Hello students, you are the future chartered accountants of India. We have discussed part 1 in which we have completed section 80 EEB of the chapter 6 say deductions. Today we are going to complete the remaining part of this chapter, that is part 2 with the section 80G. I am C Abhijith Acharya. Welcome to all for today's Abhi CA classes. Without wasting further time, we'll start today's topic. Section 80G. It says donation. All SSC, it is applicable to all SSC. The eligible donations are as follows. There are two classifications ways made. The part A, it is unlimited category. Then part B is limited category. Under unlimited categories, there are several categories. That is Jawaharlal Nehru Memorial Fund. That means if you contribute towards Jawaharlal Nehru Memorial Fund, then there is some donation, that deductions will be available. Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation, and PM Drought, that is Pradhan Mantri Drought Relief Fund. These four, if you made to the contribution to these four funds, then 50% unlimited will be 50% the deductions will be applicable for you. For example, if you contributed 1 lakh towards Indira Gandhi Memorial Trust, 50% of that, that is 50,000, you are going to claim a deduction under section 80G. Okay. Then National Defense Fund, PM National Relief Fund, PM Care Fund. PM means Pradhan Mantri, Armenia Earthquake Relief Fund, and Chief Minister Relief Fund, Lieutenant Governor Relief Fund. Then Zilla Sakshara Samiti, National Sports Fund, National Children Fund, National Cultural Fund, Swachh Bharat Kosh, Clean Ganga Fund, the National Fund for Control of Drug Abuse, and last one, Fund for Army Officers, etc. Fund for Army Officers, etc. If you contributed for these from the National Defense Fund, then the deductions would be applicable as 100% unlimited. For example, if you contributed 100%, means, let's say for a National Defense Fund, let's say you have contributed 1 lakh amount, then entire 1 lakh can be claimed by you as under a deductions chapter. Okay, this is the one of the chapter that, hence we have written 100% unlimited. Okay, super. Next, part B. Part B says limited companies. So limited categories. We have mentioned star mark over there, and we'll discuss the same in upcoming that next point. The donations to government or local authority or approved institution for promoting family planning. Next, donations to the company to Indian Olympics Association or any other institute for development of infrastructure of sports in India. If you contributed for any of these, then 100% limited would be applicable. Limited, unlimited concept we'll discuss shortly in next point. Then for these four categories, you will get 50% limited. Okay, which are they? Donations to Housing Development Authority, donations for renovation of repairs of temple, gurudwara, mosques or church, donations to any public charitable trust, and donations for promoting minority community of India. If you contributed towards any of these, then you would get 50% limited. Then under limited category, we have mentioned limited in the sense there is a limit for eligible donation. Limit that computation as follows. If you contributed towards family planning, one amount, towards Olympic Association should be considered, towards housing development should be considered. Please remember, family planning and Olympic is undertaking 100% limited. For remaining, it is 50% limited. It is only applicable for limited categories. For unlimited categories, this formula is not applicable. Please remember. Then temple, gurudwara or etc. should be taken. Charitable trust should be taken. Promoting minority. If you contributed for any organization which is in the business of promoting that minority activities, then that should be considered. You should add the entire, that is total donation. Then it should be restricted to 10% of adjusted total income. adjusted total income in the sense whichever is lower should be taken as eligible donation. Adjusted total income means the gross total income excluding the income excluding income taxable under special rate. We should not include any 112, 112A, 112A, 111A, any other special rate of income. We should exclude that. It should be reduced from the all the deductions, chapter 6A deductions, except ATG deductions, because we are claiming we have to see the eligible donation under section 80G. So you have to exclude that ATG donation. Then we have to reduce that from your total gross total income. So arrive at adjusted total income. Understanding, right? Super. Then there is one note. Deduction under this section is not allowed if donation is made in cash is more than 2,000. That means if it is made in cash, it should be restricted to 2 lakh. If you want to contribute more than 2,000, then you should be made through other than cash, that is account pay check or account pay demand draft. Okay, simple. Then we'll take one example in order to clearly see how this adjusted total income concept is applicable in this section. The family planning is if you have contributed towards family planning is, let's say, 30,000, then charitable trust is 50,000. It is seen that towards family planning there is 100% limited beneficial benefit is given. For charitable trust, 50% limited is given. So you have contributed 80,000, and out of which the 10%, the adjusted total income in our case, for example, let's say 7 lakh, it should be restricted to 70,000. You have contributed 80,000, so 10,000 is gone. So 70,000 should be allocated further into your 100% and 50%. 100% you have contributed 30,000, so entire out of 70,000, entire 30,000 you can utilize for your deduction purpose. So it is where, because it is family planning, so family planning you can see this 100% deductions is available. So obviously we have to take the 30,000. So balance 40,000 is remaining. Even though you have contributed 50,000, but out of 70,000, 30,000 is exhausted. Balance is 40,000, out of which again 50% of that should be taken. So on or around you will get 30 plus 20, that is 50,000 as eligible deduction under section 80G. Even though you are eligible for 70,000, but you have contributed towards charitable trust, so only 50% of the remaining portions can be claimed as a deductions. For example, in our case, if it is being the Olympic Association, if you contributed for Olympic constitution instead of this trust, then the balancing 40,000 can be taken. Understanding, right? Super. So, but in this case, he has contributed towards trust, so 50% of the balancing should be eligible for the deductions. No, the deduction in kind are not eligible for deductions. It should be in monetary item only. The employees make donations to Prime Minister National Relief Fund, Chief Minister Relief Fund, and through their respective employers, employees shall be eligible for deductions. Employee is not making directly, not contributing directly by his own hand. He is just contributing. He is just paying his amount to the employer. Employer then contributes to the respective fund. Though it is treated as he is eligible for that, employees are eligible for the deduction under section 80G. Even the certificate issued in the name of employer, because it is his money. But employer should issue the certificate to employees about such donations that has been made by employer to the respective fund. Okay, super. Then ATGG, rent paid of house property. It is applicable when the HRA is not received by you. It is applicable for individual. Amount of deduction is 5,000 per month, 25% of the adjusted total income, adjusted gross total income. Then rent paid minus 10% of the adjusted total income, whichever is lower should be treated as the amount of deductions. I have not mentioned that whichever is lesser, but out of these three, whichever is lesser should be taken as your the eligible deductions. Super. Then note, the SSE or his spouse or minor child, or in case of HUF, should not own any other house property at the place of his duty. There should not be any other house property and in its residential area, even for in addition to the property for which he is availing that 80GG section. Okay, then adjusted total income is gross total income minus all the deductions except these deductions. We have to check. So 80GGA deduction in respect of donations for scientific research or rural development. Scientific research or rural development. It is applicable for all the SSEs except SSEs having business income. Okay, because if I am having a business income, I would be available that deductions under that chapter only, section 35, if I'm not wrong. And 100% donations is eligible for the deductions. Then cash, if you make any cash donation, can be made up to 2000. Or above, if you want to contribute more than 2000, then the should be made through account pay check. Super. Then 80GGB donation to political parties or electoral trust. Okay, 80GGB says donations to made to the political parties and electoral trust, BJP, Congress, or any other party as you wish. The applicable SSE is only for Indian company. The 100% deductions you can claim as a deduction under section 80GGB if you are an Indian company. Then 80GGC, it is applicable to the same concept, applicable to all other SSEs other than Indian company, because for Indian companies 80GGB is there. For all other SSEs other than all other SSEs, 80GGC is there. If you contribute towards the political parties, then 100% deductions can be taken. Super. Next, 80JJAA. It is very important for your examination purpose. Deduction in respect of employment of new employees. Okay, if you are the eligible SSEs, any SSEs engaged in the business or professions to whom section 44AB is applied. That means the tax audit is applicable. 1 crore or 10 crore that we have discussed in your PGBP chapter. That amount of deduction is 30% of the additional employee cost. The deductions can be availed for 3 consecutive years. Okay, the additional employee cost, total emoluments. Additional cost means the total emolument, that is the salary or any other the CTC, that is cost to the company, or payable to the additional employees employed during the previous year. Okay, in case of existing employees, employers, then additional cost shall be nil if there is no increase in the total number of employees. Emoluments paid otherwise by through account paycheck. If there is only the increase in employees, then only that deductions will be applicable. Or if emoluments should be made only through account paycheck, account pay draft, NEFT, RTGS, or ACS. If it is made through cash, then no deductions will be applicable for existing employers. Okay. Then, for example, will take one example. The opening employees in the organization is 100. The 5 employees are joined in the previous year, and 5 are hired off, or 5 are fired off, or left the organizations. So effectively, that organization is having the same number of employees in the previous year as compared to the last previous year. So 100, opening 100, closing 100. So there is no increase in the employees, and accordingly that organization is not going to claim the deduction in respect of that 5 employees hiring employee costs. Okay. In case of new business, if I am a new business, then additional employee cost shall be emolument paid or paid to the employees employed during the previous year. Simple. Then additional employees do not include. That additional employees should not include those who are receiving the emoluments or salary more than 25% of the per month. If I am receiving more than 25% per month in my organization, then that organization is not availing, is not eligible for deduction under section 80JJAA. Then employee employed during for less than 240 days in a previous year. If I have hired some of the employees with the previous year, if they are hired for less than 240 days, it should be more than 240 days. If it is less than 240 days in a previous year, then I will not get the deduction under section 80JJAA, or that days will come down to 150 days in case of I am a manufacturing of apparel, that is food, fare, or leather products. Okay, then employees do not also participate in RPF. If I am having if I am an organization, I am having an organization in which employees do not participate in RPF, then also I am not eligible for 80JJAA. The employees to whom the entire contribution paid by the government under employees pension scheme or employees provident fund, that contribution is paid by the employees or pension scheme or employee provident fund. Okay, then note, if an employee is employed during the previous year for less than 240 days or 150 days as the case may be, then I am not receiving that, I am not eligible for that 80JJAA, correct? But I am that employee is employed for a period of 240 days or 150 days in the immediately succeeding year. That means in 23-24, the employees are employed during less than 240 or 150 days as the case may be, but they are still there in 24-25, and they obviously they are employed for more than 240 or 150 days. In that case, it is deemed as I am eligible for the 80JJAA. I am means that organization is eligible for 80JJAA in the previous year 24-25, even though they are not employed in that previous year. Because in that 23-24, I am not eligible for that deductions, but 24-25, they would be, that employer would be eligible for deductions if that those employees are still there in the organizations for 240 days or more or 150 days or more as the case may be. Super na? The deduction is allowed only if the books of accounts is audited and audit report should be submitted on time, that is within due date. Super. Then 80Q2B, royalty from books or literacy or artistic works, scientific and nature. The eligible SSC is resident individual. The amount of deduction is very simple. Eligible royalty received or 3 lakh, whichever is lower. What do you mean by eligible royalty received? Means in case of lump sum royalty, if you received entire lump sum in one shot, then amount received as royalty will be considered to in order to compare that against the 3 lakh. Then if it is not been the not lump sum, if it is been annuity basis, then up to 15% of the value of the book sold should be taken here. The cost of that selling price of that books into that 15% into number of books should be taken in order to compare against 3 lakh. Whichever is lower should be taken as a deduction under section 80 QQB. Next, 80 RRB, royalty from patents. Royalty from patents, resident individual, amount deduction same, eligible royalty received or 3 lakh, whichever is lower. The note is very important for both 80 QQB and 80 RRB. If royalty is received outside India, then deduction is allowed only if such a royalty amount is brought into India in convertible foreign exchange within 6 months from the end of previous year or time allowed by RBI. If I have received the royalty outside India, then that royalty should be brought to India within 6 months from the date of end of the previous year. That is, end of previous year means 31st March 2024. Within 6 months means within 30th September 2024, it should be brought into India, or that as a time as specified by RBI. Okay. Then 80TTA is very important. Interest on saving banks. It's an income, but against which you will claim a deduction up to 10,000 under section 80TTA. It is applicable for individual or HUF, and amount of deduction is actual interest amount that you have scored under income from other sources as an income. That amount should be compared with the 10,000. Maximum cap is 10,000. Whichever is lower should be taken as 80TTA. For example, if I am having an interest income of SB interest income of 7,000, then only 7,000 I can claim as a deduction. If I am having a 15,000, the 15,000 should be shown as an income first, but later 80TTA up to 10,000 only I would be available for the deductions. Then SB account is with the maintaining with banks, cooperative banks or post office banks, etc. Then the deduction is available only for this deduction is not available for it is actually mentioned, spelling error is being there. This deduction is not available for resident who is a senior citizens, as section 8 is available for them. Okay, this deduction is not applicable for them. Okay, for whom? for senior citizen, because for them 80TTB will be applicable. Then section 80TTB, it says the deduction in respect of deposit in case of senior citizens. In these sections, we are covering both SB account interest or FD interest both. The resident senior citizen whose GTI, gross total income, includes interest on deposit with banks, cooperative banks, or post office, for whom 80 DTA is not applicable, for them 80 TTB is applicable. In respect of interest on FD, interest on SB both, but here only interest on SB is to be taken, 80 TTA. For note for both, interest amount or 50,000 whichever is lower. Note for 80 TTA and 80 TTB, where interest income is derived from any SB bank or FD bank on behalf of the firm AOP BOA, the partner is not eligible for this section because that FD and SB is maintained in the name of that firm or AOP or BOA, right? Super. Next is section 10AA. This is very important, special economic zone. If in computing the total income of undertaking which begins to manufacture or produce of an article or thing or computer software in any SEZ, if you are having a business of manufacturing or production of anything or any particle or computer software in a special economic zone that has been mentioned by central government, then deductions would be as follows. For first 5 assessment year, you will get 100% deduction as 100% deduction of your export profit. For next 5 assessment years, you are going to receive a deduction of 50% of the export profit. Then for next 5 assessment years, amounted debited to profit and loss account or credited to SEZ account, that is whichever is lower. Reinvestment allowances reserve account or 50% of the export profit, whichever is lower, will be given as a deduction in under section 10AA. Okay, what do you mean by export profit? The profit and gain from unit of located in SEZ, the SEZ ka profit into export turnover of that SEZ divided by the total turnover of that SEZ. Total turnover means domestic turnover and as well as export turnover, but we are export profit means total profit into export turnover divided by total turnover. Okay, export turnover means consideration in respect of export brought to India in convertible foreign currency within the time limit specified by RBI. Sale proceeds deemed to have been received in India, if such amount is credited to a separate account maintained by the SEC outside India with the approval of RBI, not so important. Amount credited to SCZ, reinvestment allowance reserve, should be utilized. Whatever amount lying in that reserve account should be utilized for the purchase of new plant and machinery or put to use, should be within 3 years from the date of creation of that reserve. If it is misutilized, if it is not utilized, then the deductions claimed earlier would be taxable and as PGBP. Simple. It should be utilized for the purchase of that plant and machinery or fixed asset within 3 years. Then export turnover or the total turnover does not include the freight or telecommunication charges, insurance or expenses for providing the services outside India. Further, export turnover shall not include any cash compensatory report, duty drawback and profit on sale of import entertainment. It is only including any other profit excluding these. Total turnover means export turnover plus domestic turnover. The last section of this chapter is section 115 JC, that is alternate minimum tax, that is short AMT. It is applicable for all the SSC except the company, because for company the minimum alternate tax, that is MAT, will be applicable. So except a company, for all the rest of the SSCs, this section is applicable. It says income tax should be payable the higher of the following. Number 1, as per the normal provision of this act, that is 115 BSC or any other section, old tax regime, whatever amount should be taken, tax amount should be taken, compared with the 18.5% of adjusted total income. 18.5% of the adjusted total income should be compared, whichever is higher, you should pay. What do you mean by adjusted total income? Here means the total income as per the normal tax provision. That should be added back by the deductions that you have claimed as under section 10 AA or the deduction under section 35 AD, that is the specified business, the deduction is to be added, 14 business. Then deductions under section 80 QQB, 80 RRB, 80 JJAA should also be added back in order to arrive at the one amount. That should be reduced by the depreciation as per section 32, assuming that deduction 35 AD was not claimed. If it is been claimed, then deductions would not be applicable. That should be reduced in order to arrive at adjusted total income. Super. The AMT shall not be applicable if adjusted total income is less than or equal to 20 lakh. If adjusted total income is more than 20 lakh only, this AMT provision is applicable in case of individual HO of the same category. The provision of AMT shall apply even if the SSE is claiming the deduction under section 80 10 AA, 35 AD, 80 QQB, 80 RRB, 80 JJAA. If your question says something about 80 AA, 35 AD, 80 QQB, 80 RRB, then 80 JJA, then that point should be triggered in your mind that we have to check the AMT provision. If it is more than 20 lakh only, that we should check the comparison. If it is less than 20 lakh, then AMT provision is not applicable. What do you mean by section 115 JD is AMT credit? For example, if the tax amount as per AMT is more than the tax amount as per normal regime, as a normal provision, then excess amount is treated as AMT credit. For example, AMT, as per AMT provision, the tax amount is 12 lakh. As per normal provision, the tax amount is 10 lakh. The excess 2 lakh, but you have to pay the 12 lakh amount to the income tax government. Excess 2 lakh is considered as AMT credit that you can utilize. AMT credit can be carried for a set off again for next 15 assessment years, excluding this. The credit can be set off, that extra 2 lakh can be set off in the year in which regular tax is more than AMT provision, only to the extent of difference. For example, in any of the next 15 years, if my tax as per normal is 12 lakh and AMT is 10 lakh, here I have to pay whichever is more is 2 lakh, extra is 2 lakh, so I can utilize that 2 lakh from here. Okay, this is the AMT credit. It is like, it is the same thing as ITC, that's input tax credit, but yet AMT credit. SSE can claim AMT credit in the previous year even if the AMT provision is not applicable. For example, in any of the previous year, if you are not eligible, you not have to pay the AMT provisions or tax because your adjusted total income is less than 20 lakh, less than or equal to 20 lakh. In that case also you can utilize that AMT credit. Okay, this is the entire concept. Here we go completed the entire concept of deductions at chapter 6A deductions along with section 10 AA SEZ and section 115 JDJC, that is AMT provisions. I hope you have enjoyed this entire chapter. If you have any doubt, please don't hesitate to mention in the comment box and also mail me, or you can also Instagram me, and please revise this concept again and again, and because this is very important for your examinations. And we'll see in the next chapter, that is TDS TCS concept, because it is a very important chapter in the upcoming days. Very soon we'll be seeing that with that chapter. Till then, signing off, Abhijith Acharya, Abhi CA Classes. Have a nice day. Bye bye.